Alrighty, what's going on, guys? Edward here, back with another video, and this time I'm going to be showing you another ICT entry model, which is very similar to Boss and Chuck. Just trading. We do have a break of a structure to the upside, then price fails to this place above, ends up actually dropping, displacing to the downside, having a market structure shift, which is basically a Chuck. Right, then price pulls back to your premium. In this case, we're interested in looking for sales, and we should be spotting a fair value gap or a supply zone. All right, but we have to be at the premium if we want to go selling, right, and then going for previous lows right there. So this is a market structure shift or a change of direction. Market has failed to continue pushing up and is having that failure. Okay, that failure has to happen with a lot of displacement, a lot of volume to the downside. Okay, again, this is still ICT concept, and so with this confluences right here, basically you can have like a checklist, you know, before you actually make your position, right? Before you make your entry, just making sure you have everything in point. So you want to see displacement to the downside, liquidity, right? That liquidity grab and displacement to the downside with the market structure shift or chalk right there, change of direction. And then you're going to be looking for a fair value gap or order block, okay, within the premium zone. In this case, we're interested in looking for sales. If we wanted to look for buys, then we want to see the opposite, right? We want to see the market actually right here. We want to see the market actually going into the discount area, okay? Ignoring any sort of fair value gap or POI within their premium, because you don't want to buy from here. It's expensive to buy, so we want to buy cheap, okay? And that's basically it, okay? So you want to see the price actually returning to that fair value gap, and this is where we're going to be entering. Okay, so I will show you actually what you can do and how you can make this type of entry. So let's go on the charts. Right, see right here, we can see that the market actually swept this low before it pushed up, right? So we do have a huge inducement. Let's go ahead and go back somewhere maybe here. This will show you what you can do. All right, you see that the price swept this low very strong, right? Failed to displace below, right? And retrace all the way back up and even close bullish, right? The candle was at some point was strongly bearish, but something happened right here that buyers just started pumping, and the candle end up actually closing entirely bullish, and this is on a daily time frame right there. So what you can do is, of course, we're going to be marking up the high and the low. I'm sorry, the high and the low of that candle, right? We're going to go in lower time frame, and I want to see, of course, what's going to happen right here. Let me go back on the daily, because candle displays above this previous candle, this previous high like that. Yeah, I'm expecting this highs to be swept. This one is most likely going to be protected, and I'm expecting new highs to be broken, like this highs to be broken eventually. Maybe it's going to go for this buy side liquidity right here, and so on. Maybe pushing even higher, like to that high right there, right? But that candle is telling me that the next candle day is probably going to be sweeping this high, and I can see that just by going into the next candle. Look what it does, right? On the next candle, price swept the high and then fails to continue pushing up and retraces back down. What it's doing is pulling back. Okay, so this is what. Let me go back to the 1 hour right here. Look at it. Look at what's happening. So on the 1 hour, we're looking for the pullback. Remember, we want to actually be buying from the discount area. So I'm going to be using my Fibonacci from the low to this high. This was the actual sweep right there on higher time frame, right? So I'm going to be using my Fib, and we can see that there is a big fair value gap right here, right? Very big fair value gap. You could be buying from here. You could actually be taking your buy position somewhere in this area. What I like to do sometimes is also, I've seen that he does this. I've seen it from ICT, is that he covers this zone and he enters at the 50% of the fair value gap. I see that there's a breaker block right here in this area. So you'll be taking the position somewhere there. Stop here, take profit probably to this next buy side liquidity. Okay, we see that the market shifted, right? The actual shift is right here. The market structure shift is this one right here to the upside. Okay, after sweeping, look at the size of the displacement, right? Very, very strong. And with the displacement, you're having that market structure shift. So you're waiting for price to pull back to the discount zone. You're going to be looking for a buy somewhere in the discount zone, right? Hold on, something happened with the internet. All right, here we go. So from here, you are in the discount zone. You are actually in the fair value gap, and now all you have to do is just simply wait. Of course, at this point, this entry should be on break even. You should definitely be taking profits, once you're halfway up and securing profits right there. Probably if you like trading stop loss as well, but since this is a type of a strategy that normally it's going to have big pullbacks as well, so I'd rather wait for that. Most likely putting it on break even, but just waiting for this thing. So here we have the market actually reaching that buy side liquidity. So market shifted right there. Okay. So this would be the same, guys, for buys or sells. Okay. It's the same scenario. If I change this thing and I invert the scale, you see basically what you're trying to look is uh, is for the same thing. That big swept. You see market swept this previous high and almost immediately came back down very, very strong, right? You see that failure, that strong displacement, and with that displacement you see the market structure shift right there, breaking that previous low. So after that, what you have to do is wait for the price. Eventually it's going to start pulling back, right? Because you want the price to pull back to your, in this case, to your premium. So you're going to use your fib and you're going to be following when the price is actually pulling back. It started pulling back from here. So you mark up your fair value gap, right? And at that point, you can actually be looking for, to actually go short. Be careful if you place your stop right here. Sometimes, guys, the price will go higher. Just watch for that. Just be careful. Even though, the market just respected, just after breaking this high, is probably, I've seen also that ICT does place the stop above maybe that candle and above that high right there. So they should be protected. Just watch out for that. And then your take profit, and you could either be aiming right here or all the way down there, which is the next sell side liquidity, the closest one right there so far. So this is it, guys. I didn't want to make this video too long. Probably going to be making part two. Just let me know in the comment section below if you want to see more about this concept and this type of entry models. And so remember, you can actually use the confluences I just gave you to help you improve um, this entries, and just having in mind the actual setup, right? Just having in mind, remembering that this is what sort of what you're looking for. Okay, after a break of a structure to the upside, after let's say a boss, right? You have a break of a structure to the upside. If this thing really wants to continue pushing up, probably it's going to slow down. After the break, it's going to be slowing down a little bit. Maybe it probably is going to be creating new highs or so, right? But if you see that the price broke and closed above, the body of the candle closed above, but then the next candle or two, we're seeing the price retracing back down with a strong displacement, and even actually now causing that market structure shift or chalk. That's telling you price doesn't want to go up. It's probably going to be reversing. All right. So it's about watching and checking for the signs that markets are going to give us. So this concept is actually really, really good. Let me know what you think in the comment section below. Please subscribe if you're new on the channel. Give it a big thumbs up. It motivates me to keep posting content for you guys more often. And I'll see you in the next one. Take it easy.